Thank you. I'm Joel Moser. I'm a partner at Kaye, Scholer, a law firm. I'm head of the energy and infrastructure group there. We represent investors, private equity funds, institutional investors, and lenders, energy and infrastructure projects around the world. I'm also a professor at Columbia University School of International and Public Affairs, where my topic is infrastructure, finance, and development. In terms of where the opportunities will be in 2014, I think that Africa will continue to be a rich source of opportunities for capital deployment, and as my panelists have already identified, particularly in the energy, water, and infrastructure space. There is a growing trend in the institutional investment community to want to invest in real assets, and real assets tend to be infrastructure assets, energy assets. I consider energy part of infrastructure, as well as core real estate assets. We recently saw the huge port in Nigeria coming to financial close, a very impressive transaction, a capital-intensive transaction. I think we will continue to see these kind of mega projects as well as opportunities, particularly in the energy space, the extractives energy space, in particular upstream exploration and production. And since we're in the New York Stock Exchange, I am not typically a listed securities guy, but I'll take a few shots at some stock tips. I would look at companies that support these kind of transactions. I would look at companies in the heavy construction space, in the oil space, particularly companies that support upstream oil exploration and development. I think there'll probably be some mergers and acquisitions activity there, and I think it would be a good place to do some deep dive research for stocks. Thank you.
Well, Joel, you've been very patient with me going through with all the other panelists, but you're a very experienced attorney. You've done work in Africa, in energy, in infrastructure, and I'm just curious, from your vantage, when you're advising investors, what would you consider the most attractive areas for investment on the infrastructure front in Africa?
My panelists are all very wise, and much of this has been astutely articulated. First, probably invest through a fund. That's probably the smartest thing. In an emerging market, you want to have hands-on managers who know the market very well, know the risks, as David articulated earlier, understand the political risks, perhaps have a better sense that there are less risks than the market generally perceived. I think it's important, as we heard at the end of the prior session, to recognize that most institutional investors are investing the capital of others, so they have a fiduciary standard. And I completely agree with what Mr. Cameron just said about the potential for new technology in an emerging market. When you're starting with less infrastructure, it makes more sense to build something new and think through differently. But the challenge is, well, as David said, half of the good news is that the grant funding can fund half of the infrastructure. The rest of it's going to have to be funded primarily with institutional investors who are investing to a fiduciary standard and will want to see that those are sensible investments. Unfortunately, through the existing Western established market paradigms. So what does that boil down to in terms of energy, infrastructure, and those kind of assets? In the short term, it probably means that the deals that are going to get transacted, for which there is not donor funding, are going to be those with extremely strong sovereign counterparty credits. Basically, the government is indirectly doing off-balance sheet funding, or there is an indirect government support in the nature of an actual or virtual monopoly, as in a port when there are limited license opportunities. And finally, and probably most prominently, those projects which are affiliated with extractives, resources, throughput. In the energy sector, I think it's going to be very, very, very much about upstream oil in Africa in the next year.
Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.